Trump did not take control of Venezuela because of oil. He took Venezuela because of silver. 121 million ounces of silver move through Venezuelan ports every year. Silver that was never supposed to leave South America. Silver that China was smuggling through a network that most Americans have never heard about. This happened fast. Maduro fell on January 5th. Within 4 days, shipping manifests from 3 Venezuelan ports were seized by U.S. authorities. Those manifests revealed something that changes everything you thought you understood about why America suddenly cared about Venezuela again. Venezuela was not just an oil state gone wrong. Venezuela was a silver highway, a smuggling route, a gap in the system that let China bypass every trade restriction, every monitoring system, every control that was supposed to track where precious metals move. Here is what the manifests showed. Between March of last year and December, over 121 million ounces of refined silver passed through Puerto Cabello, La Guaira, and Maracaibo. The official export records claimed this silver was going to Panama for industrial use. It was not going to Panama, it was going to Shanghai, through shell companies, through falsified documentation, through a route that avoided every checkpoint. This silver came from 3 sources. Peruvian mines shipped raw ore to Venezuelan refineries, where processing happened off the books. Bolivian production moved overland through routes that bypassed official border crossings. And Mexican cartels, yes, cartels, were selling diverted mining output to Chinese intermediaries operating in Caracas. All of this silver was refined in Venezuelan facilities that officially did not exist. These refineries were not registered. They paid no taxes. They reported no production. But they processed millions of ounces monthly. And every ounce went to China through shipping routes that looked legal on paper, but were completely fraudulent in reality. Why does this matter to you? The smuggling operation is why China could run its export ban without destroying its own economy. They did not need to export silver officially. They were importing it secretly, through Venezuela, through routes that U.S. intelligence either did not know about or chose to ignore until now. When China announced its export ban on January 3rd, suspending licenses for all 44 approved companies, everyone assumed China was cutting itself off from global silver markets. But China was not cutting itself off. They already had a supply line that nobody was watching. The Venezuelan route gave them everything they needed. That route is now closed, permanently. Trump moved on Venezuela 72 hours after Maduro fell. Not 72 days, not 72 weeks, 72 hours. That speed tells you this was not about democracy or human rights or oil markets. This was about cutting off China's silver supply before it could establish alternative smuggling routes. The timing connects directly to what happened with J.P. Morgan. On January 5th, the same day Maduro fell, J.P. Morgan disclosed $13.7 billion in losses from silver derivative positions that could not be closed. These losses came from the same 80% premium trap that China engineered. But nobody asked how China could maintain that trap if its domestic supplies were supposedly cut off by its own export ban. The answer was Venezuela. China was importing silver secretly while banning exports publicly. This lets them create artificial scarcity in Western markets while keeping their own industries supplied. The premium gap existed because the West thought China was isolated, but China was never isolated. They had 121 million ounces flowing in through routes that were invisible to markets. Trump shut down those routes, and the consequences are spreading faster than anyone predicted. Here is what most people are not paying attention to. The Venezuelan silver route was not just about physical metal, it was about a financial settlement. Chinese banks were using Venezuelan intermediaries to settle silver contracts without triggering U.S. monitoring systems. When a Chinese manufacturer needed silver, they would contract with a Venezuelan shell company. That company would source silver from the smuggling network. The silver would be delivered to Shanghai. Payment would flow through Venezuelan banks that had no direct U.S. oversight. This structure lets China bypass every financial control. No SWIFT monitoring, no Treasury oversight, no way for U.S. authorities to track who was buying what or where money was flowing. Venezuela became a financial black hole where billions in silver transactions happened completely off the radar. Now that the black hole is closed, Chinese manufacturers who depended on the Venezuelan route have no supply. Chinese banks that used Venezuelan intermediaries for settlement have no mechanism. The entire system that let China maintain the 80% premium while claiming they were isolated just collapsed. Markets have not priced this in yet. Silver is still trading as the Venezuelan route exists. Like China can maintain supply through secret channels. But those channels are gone. And when markets realize this, prices will move violently. The 121 million ounces that moved through Venezuela annually represented roughly 15% of the total global silver supply. Not my production. Total supply, including recycling and above-ground stocks. That is a massive amount. And it was never counted in official figures because the route was never visible to the authorities who compile those figures. This means every supply and demand analysis you have read is wrong. Every forecast is based on incomplete data. Every model assumes supply levels that were artificially inflated by smuggling. The real supply situation is much tighter than anyone knows. And it is about to get much tighter as the Venezuelan route stays closed. Trump understands this. His team understood this before they moved. The operation to take control of Venezuelan ports was planned carefully. U.S. military advisors were positioned in Colombia weeks before Maduro fell. Legal frameworks for seizing assets were prepared in advance. Diplomatic pressure was coordinated with regional allies. This was not improvisation. This was the execution of a plan that had been ready and waiting for the right moment. When Maduro fell, Trump activated that plan immediately, because he knew the window would be short. China would try to establish new smuggling routes. Other countries might step in to replace Venezuela as a silver highway. Speed was essential. The 3 Venezuelan ports are now under effective U.S. control. American personnel are inspecting every shipment. Every manifest is being audited. Every container is being scanned. Nothing moves without documentation that can be traced and verified. The refineries that processed smuggled silver are being shut down. Equipment is being seized. Records are being confiscated. The entire infrastructure that enabled the smuggling operation is being dismantled systematically. China cannot rebuild this network quickly. Venezuela was uniquely positioned. Geographic location between major South American producers and shipping lanes to Asia. A corrupt government that could be paid to look the other way. The banking system was already isolated from U.S. oversight. No other country offers this combination. Some people will argue this is about oil. Venezuela has massive oil reserves. Of course, America has an interest in Venezuelan oil, but oil does not explain the speed and precision of this operation. Oil does not explain why ports were the priority instead of oil fields. Oil does not explain why shipping manifests were seized before anything else. This was about silver. And the oil narrative is a convenient cover that lets the real operation happen without drawing attention to what is actually at stake. The average American over 40 might not understand why silver matters this much. Silver seems like a commodity for investors and industrial users, not something that determines geopolitical power. But that assumption is outdated. Silver is critical for every technology that defines modern military and economic power. Solar panels, electric vehicles, 5G networks, missile guidance systems, communications equipment, computing hardware. All of these require silver in quantities that most people do not realize. Control over silver supply means control over which nations can build these technologies. If China controls silver, China controls technological development. If America can cut off China's silver access, America can slow China's technological advancement. This is about the future. Which nation has the resources to build the technologies that will dominate the next 50 years? Oil matters, but silver matters more for what is coming. The 121 million ounces that moved through Venezuela annually were funding China's entire strategy. Their belt and road infrastructure, their military modernization, their technological development. All of it depended on a steady silver supply that nobody was tracking, now that the supply is cut. And China has no easy replacement. Russia does not produce enough silver. African sources are unreliable and expensive to develop. South American producers other than Peru and Bolivia are minor players. China's options are limited. This creates an opportunity for America, not just to deny China resources, but to position American industries to capture markets that China will struggle to serve without adequate silver supply. Every Chinese manufacturer that cannot get silver is a market opportunity for American manufacturers who can. Trump sees this clearly. The Venezuelan operation is not just about cutting off China. It is about creating advantages for the American industry, about ensuring American manufacturers have silver access while Chinese competitors struggle. The shipping manifests seized from Venezuelan ports tell a story that nobody in financial media is covering. These documents show exact quantities, exact dates, exact shipping companies, and exact destination ports. They show a pattern that was repeating monthly with mechanical precision. The same shell companies, the same falsified paperwork, the same routes, month after month for over 2 years. One shell company alone, registered in Panama under the name Comercializadora Hemisferio Sur, processed 43 million ounces through Puerto Cabello between April and November of last year. The company listed its business purpose as industrial supply distribution. But the company had no employees, no office space beyond a registered address, no equipment, no inventory, nothing but bank accounts and shipping contracts. The silver that moved through this company came from a refinery outside Valencia, Venezuela. The refinery was owned on paper by the Venezuelan government, but Chinese technicians ran the operations. Chinese managers controlled quality standards. Chinese logistics coordinators arranged all shipping. The Venezuelan government provided nothing but the location and the corrupt officials who made sure inspections never happened. This refinery processed ore that arrived by truck from the Colombian border. The ore came from small Peruvian mining operations that sold to intermediaries who transported it overland through Ecuador and Colombia. These were not major mining companies with international oversight. These were small operators producing maybe 50 to 100,000 ounces per year each, too small to attract attention, too scattered to monitor effectively. But when you combine dozens of these small operations, you get millions of ounces annually, all moving through routes that official statistics never captured, all feeding into refineries that official records said did not exist, all being shipped to China through documentation that looked legitimate enough to pass casual inspection, but fell apart under serious scrutiny. The manifests show that Commercial Isadora Hemisferio Sur shipped silver to Shanghai 41 times in 8 months. That is approximately one shipment every 6 days. Each shipment averaged 1 million ounces. The shipping company was always the same. A Chinese-owned freight operator called Orient Maritime Holdings specializes in routes between South America and Asia. Orient Maritime Holdings appears in the manifests for all 3 Venezuelan ports. They were the primary shipper for the entire smuggling network. Their ships made the Venezuela to Shanghai run continuously. They picked up containers in Puerto Cabello, La Guaira, and Maracaibo, then headed directly across the Atlantic, around Africa, and into the South China Sea. U.S. authorities are now tracking every ship operated by Orient Maritime. Every container that the company has moved in the past 3 years is being investigated. This is not just about Venezuela. This is about mapping the entire network that supported the smuggling operation. What makes this different from normal trade enforcement is the speed. Usually, when authorities discover smuggling networks, investigations take years, prosecutions take longer. The network has time to adapt and establish new routes. But this time, the response was immediate. Within 4 days of seizing the manifests, Trump announced sanctions on Orient Maritime Holdings. All their assets in the U.S. jurisdiction were frozen. All their ships were barred from U.S. ports. Any company doing business with them faces secondary sanctions. This killed the network completely. Orient Maritime cannot operate. No replacement shipping company can step in without facing the same sanctions. Any Chinese bank that processes payments for them gets cut off from dollar clearing. The infrastructure that enabled 121 million ounces to move annually just collapsed. China cannot easily rebuild. Finding shipping companies willing to risk U.S. sanctions is difficult. Finding new smuggling routes that offer Venezuela's combination of location, corruption, and banking isolation is nearly impossible. China spent years building the Venezuelan network. They cannot replace it in weeks or months. This brings us back to J.P. Morgan's $13.7 billion loss. These losses came from silver derivative positions that assumed China would maintain its 80% premium. J.P. Morgan and other banks sold insurance on that premium. They bet the premium would narrow. They thought China's export ban was real isolation. They did not know about the Venezuelan route. When the premium stayed high despite China's supposed isolation, J.P. Morgan's positions started losing money. The losses accumulate daily. By January 5th, the losses were so large that J.P. Morgan had to disclose them. $13.7 billion in a single derivative position. This is one of the largest trading losses by a U.S. bank in over a decade. But here's what almost nobody is discussing. J.P. Morgan's disclosure happened the same day Maduro fell, the same day Trump moved to take control of Venezuelan ports, the same day the shipping manifests were seized. This timing is no coincidence. J.P. Morgan knew about the Venezuelan smuggling route. They had to know. You do not take a $13 billion position without understanding the underlying supply dynamics. They knew China was not actually isolated. They knew the premium was being maintained artificially through secret imports. They bet the smuggling route would continue. They were wrong. When Trump shut down Venezuela, J.P. Morgan's position collapsed completely. The premium they thought was sustainable suddenly looked temporary. The supply situation they thought was manageable suddenly became critical. Their entire model broke. Other banks faced similar problems. Goldman Sachs has not disclosed specific losses yet, but their commodities trading division is known to have a large silver exposure. Morgan Stanley already admitted to 32 million ounces they cannot deliver. Multiple European banks have derivative positions tied to silver premiums that assumed the Venezuelan route would continue. All of these positions are now underwater. All of these banks face losses they did not anticipate. All of them bet that China's smuggling network would operate indefinitely without U.S. interference. Trump proved them wrong. The Federal Reserve's $17 billion liquidity facility that appeared on January 5th was not just for J.P. Morgan. It was for multiple institutions that got caught in the same trap. The Fed saw what was coming. They knew Trump was moving on Venezuela. They knew the smuggling route was about to close. They created the facility before the losses became public to prevent cascading failures. This is crisis management in real time. The Fed is lending money to banks that made bad bets on silver because China's supply lines were based on smuggling that U.S. authorities were about to shut down. The banks did not factor in the possibility that Trump would actually cut off the Venezuelan route. Now they are paying for that miscalculation. The smuggling operation also involved Mexican cartels in ways that are only now becoming clear. The manifests show regular shipments from Mexican sources through Venezuelan ports. These were not coming from legitimate Mexican mining operations. Mexican silver production is tracked closely by international authorities. The silver moving through Venezuela was not in any official statistics. The silver was being diverted from Mexican mines by cartels that control the regions where those mines operate. Small amounts from multiple mines add up to significant quantities. The cartels would sell this diverted silver to Chinese buyers for prices well above market rates. The Chinese buyers were willing to pay premiums because the silver came with no documentation trail. It could be refined in Venezuela and shipped to China as a Venezuelan product. No Mexican export records, no international monitoring. This cartel involvement means Trump's Venezuela operation has implications for Mexican policy as well. If cartels were using Venezuela to monetize stolen silver, and that route is now closed, those cartels need new revenue sources. This could mean increased drug trafficking or other criminal activity. It could mean more pressure on the Mexican government to crack down on mining region corruption. The connection between Venezuela, China, and Mexican cartels creates a three-way dynamic that nobody in mainstream analysis is examining. But this dynamic shaped silver markets for years. It created a supply that never appeared in statistics. It funded criminal organizations and hostile governments simultaneously. And it operated completely outside the oversight systems that were supposed to prevent exactly this kind of activity. Now that the dynamic is broken, the consequences are just beginning to emerge. Markets still do not fully understand what just happened. Analysts are still writing about supply and demand using data that was always incomplete. Traders are still pricing silver based on models that assumed smuggling would continue. When reality catches up to markets, the adjustment will be severe. Physical silver prices will spike as real supply tightness becomes obvious. Paper silver markets will face a crisis as the gap between paper prices and physical prices becomes impossible to ignore. Banks holding derivative positions will face margin calls that they cannot meet. The entire structure that co-connects paper and physical markets will strain and possibly break. Trump understands all of this. His team planned this operation knowing exactly what market consequences would follow. They accepted those consequences as the necessary costs of cutting off China's silver supply. They prioritized strategic advantage over market stability. This is a fundamentally different approach than previous administrations that would have tried to manage the situation more gradually to avoid market disruption. The speed and decisiveness of the Venezuela operation signal that Trump is willing to accept market chaos if it achieves strategic objectives. This is not about maintaining stability. This is about winning, about ensuring America controls critical resources, even if that control comes through dramatic action that creates short-term turmoil. The 121 million ounces that moved through Venezuela annually will not be replaced quickly or easily. This is a permanent supply reduction in real terms. Markets will eventually have to price this in. When they do, everyone holding physical silver benefits. Everyone holding paper contracts, H hoping for physical delivery. Y faces serious problems. The average American over 40 needs to understand this distinction. If you own physical silver, you own something that is becoming scarcer as supply routes get cut. If you own paper silver through ETFs or bank certificates, you own promises that might not be fulfilled when supply tightness becomes undeniable. The Venezuelan smuggling route made it possible for financial institutions to maintain the fiction that paper and physical silver are interchangeable. There was always enough physical supply moving through secret channels to cover most delivery demands. But with the smuggling route closed, physical supply is truly limited. The fiction cannot be maintained. This is why JP Morgan faces $13 billion in losses. This is why other banks need Federal Reserve support. This is why Trump moved so fast on Venezuela. Everyone who understood the real dynamics knew that closing the smuggling route would force a reckoning between paper and physical markets. That reckoning is happening now. The 44 companies that China suspended on January 3rd were never the real supply source. That list of licensed exporters, YAS theater, window dressing for international observers. China was showing the world they were limiting exports through official channels while importing massive quantities through Venezuela. The export ban created a scarcity narrative that justified premium pricing, while secret imports kept the Chinese industry supplied. This is sophisticated economic warfare. China was not just manipulating markets. They were manipulating the perception of markets, making the West believe China was isolated while China remained fully supplied, creating artificial scarcity that pushed prices up while maintaining cost advantages for Chinese manufacturers. The Venezuelan route was the key to this entire strategy. Without it, China's export ban would have hurt Chinese industry as much as it hurt Western buyers. Chinese manufacturers would have faced the same shortages and premium prices as everyone else, but the smuggling route meant Chinese industry kept a steady supply at controlled prices, while Western competitors paid 80% premiums. Trump ended this advantage in 72 hours. The planning must have been in place for months. Intelligence agencies must have been tracking the Venezuelan route for years, but Trump waited for the right moment, waited until Maduro's government was weak enough to fall, then moved immediately to take control of the ports and shipping infrastructure. The timing also connects to broader U.S.-China trade dynamics. Trade negotiations have stalled. Technology transfer restrictions are tightening. Both nations are positioning for long-term strategic competition. Silver is one battlefield in this larger conflict, and Trump just won a major engagement by cutting off China's secret supply line. What happens next depends on whether China can find alternative smuggling routes or whether this supply disruption becomes permanent. China will certainly try to establish new routes. They might use Myanmar or Laos for overland smuggling from scattered Southeast Asian sources. Each new intermediary is another potential failure point. The United States now has a template for disrupting these routes. The Venezuela operation showed how fast and decisively America can move when political will exists. If China establishes new smuggling routes, Trump can shut them down using the same playbook, seize manifests, sanction shipping companies, freeze bank accounts, dismantle infrastructure, do it all fast enough that China cannot adapt. They can plan around a able I, FI expensive, E-supply. Chinese competitors cannot make the same assumption. This create a S competitive advantage that compounds over time. The 121 million ounces that moved through Venezuela represented more than just physical metal. It represented Chinese confidence that they could operate outside international systems without consequences, that they could build infrastructure for evading oversight, and America would not respond effectively. Trump's Venezuela operation destroys that confidence. It proves America can find these hidden networks and dismantle them rapidly. It proves political will exists to take dramatic action on strategic resource issues. It proves that China's economic warfare tactics can be countered with equally aggressive American responses. This changes calculations throughout the Chinese government and industry. Projects that assumed continued access to smuggled silver must be reconsidered. Strategies that depended on maintaining the 80% premium need revision. The entire approach to resource security that China has pursued for the past decade faces new risks. The financial consequences are spreading beyond banks with direct silver exposure. Companies throughout supply chains are affected. Electronics manufacturers who bought components from Chinese suppliers that depended on smuggled silver are seeing delivery delays. Solar panel installers who ordered from Chinese producers are facing cancellations. Electric vehicle manufacturers who sourced battery components from China are scrambling for alternatives. These disruptions will accelerate over the next 3 to 6 months as inventories deplete and the absence of Venezuelan smuggling route becomes undeniable. Companies will discover that suppliers they thought were reliable were actually dependent on illegal supply chains. Contracts will be breached, prices will increase, substitutes will be sought. Some American companies will benefit from these disruptions. Domestic silver miners will see increased demand. American refiners will capture market share from Venezuelan operations that no longer exist. U.S. manufacturers who source from legitimate channels will gain advantages over competitors who rely on smuggled inputs. But many American consumers will pay higher prices. Electronics will cost more. Solar installations will become more expensive. Electric vehicles will face component shortages that slow production. The costs of shutting down the Venezuelan route are not borne only by China and corrupt intermediaries. Regular Americans pay too through higher prices and reduced availability. This is the trade-off Trump made. Accept short-term pain for American consumers in exchange for a long-term strategic advantage over China. Prioritize weakening adversary supply chains over maintaining low prices. Choose national security over economic convenience. Whether this trade-off is worthwhile depends on the time horizon. In the next year, Americans face higher costs. In the next decade, America might have decisive advantages in critical technology sectors because China's resource access was constrained during crucial development period. Trump is betting the long-term benefits outweigh short-term costs. The average American over 40 is living through a fundamental shift in how economic competition works between major powers. For decades, the assumption was that trade benefits everyone, that open markets create prosperity, that nations become peaceful through economic interdependence. These assumptions shaped policy across multiple administrations from both parties. Those assumptions are dead now. Both America and China have accepted that economic competition is a zero-sum struggle, where one nation is gain is another is loss. Trade is not about mutual benefit. It is about strategic advantage. Resources are not allocated by markets. They are controlled by governments pursuing national objectives. This shift means the rules you learned about how economies work no longer apply. Market forces do not determine prices when governments manipulate supply through smuggling and embargoes. Free trade does not exist when nations use export bans and sanctions as weapons. Competition is not between companies. It is between countries using companies as instruments. The Venezuela operation is one example of how policy now works in this new environment. Identify adversaries' hidden advantages. Attack them decisively. Accept collateral damage. Move on to the next target. This is not the patient diplomatic approach of previous decades. This is aggressive economic warfare. You cannot avoid being affected by this shift. Your costs will rise as supply chains are disrupted for strategic reasons. Your investments will be impacted as markets adjust to new realities. Your retirement security depends partly on whether American strategic bets succeed or fail. Understanding what is actually happening becomes essential. The official narratives about Venezuela are not complete. The media coverage focuses on oil, democracy, and humanitarian concerns. These factors exist and matter, but they are not the driving force behind Trump's actions. The driving force is silver, 121 million ounce moving through smuggling routes that let China maintain artificial market conditions. Trump shut down those routes to eliminate China's advantage. Everything else is secondary. Physical silver is becoming separated from paper silver in ways that have not happened in modern markets. The assumption that paper contracts can always be converted to physical metal is breaking. The banks need Federal Reserve support precisely because this assumption is failing. JP Morgan's $13 billion loss proves the gap between paper and physical is real and growing. If you own paper silver through ETFs or bank certificates, you own claims on physical metal that might not exist in the quantities promised. The Venezuelan smuggling route made it possible for institutions to honor these claims because an accurate supply was always available. Without that supply, the promises behind paper silver become questionable. If you own physical silver, you own something that is demonstrably scarce. The supply that was hiding in Venezuelan smuggling routes is gone. Official mine production cannot replace it. No new sources are appearing. Real scarcity is emerging as artificial supply disappears. This is not investment advice. This is a structural analysis. The market structure that connected paper and physical silver depended on supply sources that included massive smuggling. That smuggling has ended. The structure must adjust. How that adjustment happens will determine who wins and who loses. Most people will not pay attention to any of this until the consequences reach them personally, until their solar panel installation costs more than quoted, until their electronics order gets delayed indefinitely, until their retirement account takes unexpected losses from bank exposure to silver derivatives. By then, the opportunity to prepare will have passed. By then, the adjustment will be happening, and you will just be reacting to consequences rather than positioning ahead of them. This is how most people experience major economic shifts. They notice only after outcomes are already determined. The 121 million ounces that moved through Venezuela annually are going from the global supply. Markets have not fully priced this in yet. When they do, adjustments will be sharp and painful. Physical silver will become harder to access. Paper silver will face a credibility crisis. Banks will need more Federal Reserve support. Prices will be volatile and unpredictable. Trump took Venezuela because cutting off China's silver supply serves American strategic interests, even if it creates market chaos. He made a choice. National advantage over market stability, long-term positioning over short-term comfort, aggressive action over cautious management. You live with the consequences of that choice, whether you understand it or not, whether you prepared or not, whether you even knew it was happening or not. The system is changing around you. Your wealth is affected. Your security is impacted. Your future is being shaped by decisions made in rooms you will never enter about dynamics you were never told existed. The only question is whether you see what is actually happening clearly enough to protect yourself. Whether you understand that Venezuela was about silver, not oil. That China's export ban was a cover for smuggling, not real isolation. That paper and physical markets are separating in ways that will destroy some people's wealth while protecting others. Trump just cut off 121 million ounces of annual silver supply that was moving through smuggling routes nobody was supposed to know about. China's advantages eliminated. Banks are facing massive losses. Markets are adjusting. And most Americans have no idea any of this is happening. Do you?